I'm Matias Savolan with Vagabond Investors. I like to show you a couple of charts, and this is one of those big trading ideas we have been working on last 6 months, actually more than 6 months, like 9 months now. We made some changes there, but I really think you should know this pair trade too. I'm very concerned about this US debt crisis. It's not on mainstream media yet, but everybody knows that there's a lot of problems in New York, New Jersey, California. Absolutely disastrous condition out there. Without big structural changes, there is no escape from the upcoming disaster. So what we are looking for here is the same old story of money printing, huge stimulus packages. They are not now drying up, but be sure the markets are going down. There is a lot of fear. There is a fear of double dip recession. We will see some kind of stimulus packages, even though the market is unstimulable, but still there will be some stimulus packages and money printing. How the US can work their way out of the varied debt problem.
Representing same fear, but two different kind of story. The first one here is a gold chart. This is a weekly line chart, and I've plotted 21-week moving average on this chart. I try to keep this very simple as possible, and that's why I'm using line chart here. This is probably the most recognizable and the strongest trend out there you can find at the moment. This is a place where money goes when there is a fear of severe inflation, when people don't believe the story of recovery, when they fear that money printing will spike the hyperinflation and the demand of precious metals will increase because the lack of trust on fiat currencies spreads around the world. There is a lot of problems out there. In Europe, there are a lot of problems. In China, there are a lot of problems. In United States, basically everywhere is some kind of problems. Everyone has their own problem child. So gold is trending up very, very strongly. This is the place where people put their money when they don't believe the story of handling the problems printing money. There is another camp of scary people too. They are putting their money on bonds. I use here TLT. It's a 20+ year treasury bond fund. So this means that when the price of the bond fund goes up, the yield people get paid goes down. So it's inverse relationship between yield and the bond price, as you already probably know. You can see that there are pretty steady up-down movement on bond prices, and it's a place where scary money really runs. It's a safe haven type of place, and people who get in at these levels are either freezing their money at very low yields for a very long time, or they are getting slaughtered pretty soon. This is extreme example. At the end of 2008, people were putting their money to bonds at negative yields. They said that keep my money, I pay for you to keep my money, and before the 6 months went by, they've lost 29% of their value of their bonds. They got slaughtered. they lost their shirts. That's very, very scary thing to do. And what these people were doing, these were looking for safe havens. They were running out of the risky business, and what happened to them? They got slaughtered. They really got killed. And now what's going on here? The bond prices are rallying again. They're going really high. The bond prices are looking at this previous support resistance area around here. It's very critical. This is very bad for the stock markets, and I think these guys gonna get killed. And why I think so? I'm not only thinking so because I'm the camp of huge believer of future inflation, even though there is a deflation for the short term, and these guys are really betting on long-term deflation. But how come these are the safest place to keep your money? There is a huge US debt crisis. It doesn't get a lot mainstream media airtime yet, but it will. There's a huge problems in New York, New Jersey, California, you name it, and also the government got these really big problems to solve. Unfunded liabilities almost are $65 trillion. It's enormous money. It's enormous money. And do you really think that these bonds are worth something? So if you were gonna imagine the future, the printing the money to handle the huge debt crisis, what should happen to the bond prices? Oh, they gotta go down. Just look at the bond prices in Europe. They are acting correctly. They are acting correctly. Yields are rising, and the bond prices are hammered down, just like the stock prices. That's the way it should work. Of course, you need to have some kind of safe haven, yeah, but the safe haven has to be the place which is really safe and represents a reasonable risk-reward relationship. And the bonds are not that place, at least in our portfolio. What we are looking for here is the same old trade we've been talking about since beginning of this year. Probably we were already talking this quite loudly out 2009. It was the pair trade of shorting US treasuries and being long on gold. Well, everybody sees that the first leg, shorting US treasuries, worked pretty well at the beginning of the year, and now it sucks. The gold is going our way, and this is a long-term pair trade, and we are really looking for a new entry for shorting bonds. We are not shorting them at the moment when they are going up like a rocket. We are shorting when the trend reverses and they will drop like a stone, like here. That's what we are looking for again. That was sweet move, and you can benefit it too. Just keep your eye on this. It's pure lunacy. This is lunatic move.
I just showed you those two very simple charts. You can easily see how these two different camps are trying to figure out the way to benefit or escape the same problem. The other one is gold, the money going to gold. They are betting on hyperinflation and increasing demand of physical precious metals, backing up fiat currencies. And the other one is a camp of putting money in the treasuries and getting slaughtered there. Thanks for watching us. Goodbye for now. I'm Matias Savonen with Vagabond Investment.